And good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, April 28th, 2022. Got to tell you, it gets really good these days in that each day I've come in and the market tends to surprise me. And today was no exception to this growing list of surprises this week. That the market initially started out what I thought, well, kind of went up, then they came in, they sold it off. And that was all within the first couple of hours. Then the buyers stepped in and they started to buy, and they did not stop. They bought for the entire balance of the session. And that was based on the earnings that were due from Apple and Amazon. Now, I got to tell you, those were the only two left out of the titans that need to report. So we had some follow through on Facebook, which of course yesterday blasted through 200, continued through 200 today. Stock closes up over $30, now coming back down. Google, on the other hand, starts to rally back towards, it was up $84.50 on the day. And what I find amazing is that two stocks can pull up everything else, including the companies that they didn't like the earnings of. Makes no difference. Who cares? Let them take them all up. Today's another day, blah, blah, blah. Well, Amazon came out first this afternoon, and they actually reported a loss for the quarter, for the first quarter. That was a surprise to me. I thought maybe they wouldn't do as well as the street expected, but I wasn't looking for a loss. But you know, counting whatever, how they're doing it, they reported a loss. Apple, on the other hand, reported again a solid first quarter earnings and growth in some areas. So that remains keeping Apple on a good tone. Now, more interesting will be Apple's guidance going forward. Because as I continue to say, there's no doubt in my mind that Apple, Amazon, Facebook, Google, Intel, Microsoft, Netflix, NVIDIA, all of them, they're great companies and they're titans in their sectors and in the industries. But they will not, I don't see how they can get around inflation, higher interest rates, and all that comes along with that. So again, I just make reference to, in my mind, at the top of that food chain, top of the pecking order, sits interest rates. What affects interest rates rolls on down and affects everything else underneath it. So if they're at the top and that's where the change is happening, everything down below is going to have to make an adjustment. Now, I'm not sure what traders or investors or anybody else is really looking at here, but sometimes I have to feel that it's not a realistic thought. It's not a realistic picture. Because if it was, then we would be making allowances already and not blindly buying into something for whatever reason they're doing it. So on the other hand, I'm glad that they all exist because it provides incredible opportunity to us as day traders, us as position traders, us as swing traders, option traders. There is so much trading to do that it just can be overwhelming because you don't know where to go or how you want to do it. In any case, interesting day. Now, I have had to make a change. And starting here in the NASDAQ, it is going to be most notable. And I don't know if hold on a second. I'm now looking to think, did I actually do it? Yeah, I did. Here we have, let me just go back to the daily chart. I really still don't have any changes to that big picture. I am still feeling, even with Apple, great earnings, with, everybody now kind of making their adjustments, with having to digest the Dow Jones going up over 700 points at one point, that the NASDAQ was up over 400, based really on the expectations of two tech titans. And I just kind of thought that, wow. But the reality behind that statement is not really as clear as I just can't believe it was going up. When you've got massive HFT firms scouring the market, looking for trades in the options, when these trades happen, they go in, they do them, the underlying comes into play, or it's hedged, or it's like, here's where we bought it, here's where we sold it, and it just goes from there. Now, so it can lead a false narrative in the fact that they can continue to push the stock. The buyers will still be in the stock because there's so many options to trade. So if they're selling calls, they're buying the stock. It's a done deal. If they're, it just, that's the nature of the game. So I think for myself, I need to consider with greater clarity what really can be behind the short covering that I saw, and particularly because you start to get past all these levels and you're forcing the short to cover. So how much of that got built into today's exceptionally strong rally? It truly was. It was a one-way ticket for a great part of the day. Now, like I said, I have made an adjustment to the count, but it's down on the minute level. So again, no changes to this bigger picture. I believe we are still in an intermediate third wave going down. I believe that we are still putting the all-time highs for right now at 16,768. Now, it still fits. Again, even with Apple kind of not necessarily blowing the doors off, but doing a good job with it. You can see they're doing their conference right now. The stock is ticking down. The stock hit 170, not 30 minutes ago. Now it's back down on the day. So again, what I am making, I don't see any changes into that top of the pecking order, top of the food chain there. Interest rates, inflation. We got additional confirmation that inflation still is nipping at our butts. It is just coming in. And if we want to go on this belief that's like, oh, it'll be tamed, that's not going to work because we're getting no evidence. We're getting no evidence that that is the case. We're getting, first of all, they've only done one interest rate rise. They've only raised the rates once, a quarter of a percentage point, 25 basis points. This time they're saying, well, we're going to have to do it 50. We'll see. Now that's coming up next week. Next week, we get the Fed meeting. So here we have all these earnings and everything coming out, and everybody's going to like jump for joy because of Apple. Not so happy about Amazon. Google will go back to going down. Facebook, will it recover still, or will they start to bring it back to the ground? So on and so forth. What's really going to happen to Tesla? It's now being quoted down 17 from the close. Intel didn't have the greatest quarter. That's got to be factored in. So now we get to deal with the reality. Microsoft already being quoted down, $3 on the bid, $2 on the offer. This, after we couldn't get enough of it today. So that's what I'm talking about. The deception. Now, I want to bring this down to the hourly chart and really talk about that deception. First of all, the change that I made. Now, again, we're here. There is intermediate wave 2. We're in the intermediate wave 3. That's where it started. We're going to have 5 waves of minor degree, of which we have minor 1 and minor 2. So we're in that minor third, which is on top of being inside that intermediate third. And within the minor third, there are going to be 5 waves of minute degree. And originally, I felt, okay, maybe that minute 1 was here and this is minute 2. This is sub-minute 1. We're looking for sub-minute 2. Well, we got dang close to this breaking. And in fact, the S&P did go up and ever so slightly break above its level. And again, as I've said to you before, most of the time, I am a real stickler for the rules. And in this case, that wave 2 cannot exceed the starting point of wave 1. I mean, that makes total sense. And it did in the S&P. But being that I am running both of these counts, they are the same. And as I said yesterday, basically due to the fact that the top stocks that are contributing to the moves in both the NASDAQ and the S&P are the same 7 titans, the tech titans. So that being the case, I tend to run them the same because they are moving in the same fashion. Maybe eventually that'll be decouple. And when it does, we'll adjust. I'll realize it, and then each one may have its own count. So now, minor 1 and 2 remain the same. We're in this minor third wave, and I pulled the minute wave 1 down again. I had discussed this previously. I've been running it as my alternate view. And so here we are at it. And this wave 2, just for a sub-minute, too big. Granted, characteristically, a second wave can go up and equal that first wave. It just can't exceed it. So technically, I don't think we broke any rules. Let me just, all right, let's do this. That high is 583, almost 584. And this high is 542. So we still are fairly under it in the NASDAQ, and now we're turning lower. But I'm going to leave it the way I have it simply because I think it is more clear. It's more clear. It's bringing clarification to the work, to what lies ahead. So again, 1, 2, 3, 4, 5. Minute wave 1. Minute wave 1, pretty big. But then again, I'm looking for wave 3 to be a killer. So it fits. Now, I do not compare this wave to wave 1. Excuse me, here. Where am I? This wave 1 to the minor wave 1. Let me go back out to that daily chart. So minor wave 1 to 15,262 down to 13,729. Minute wave 1, 14,298 down to 12,801. Minor wave 1 continues to be the larger, but minute wave 1 is coming in pretty big. But I already expect that this minor third wave will be very large, and that goes based on our Fibonacci retracements, which I'm now going to go back down to. Well, first let me just add I'll go back down the hourly. Let's do this in order here. So again, wave 1, if wave 2 is over, and I'm going to put up that first would be the Fibonacci retracements for right there. Come on, get down there. No, it's 01. Okay. The retracements for a wave 2. Now today it came up and knocked right on the head. Excuse me, the 50% retracement. Fibonacci 50% retracement of wave 1 came in, got touched today. Right above that sits the hourly 200 moving average. What is the additional potential that we're going to go up there and break above that hourly 200 moving average and work our way to 13,732.33. That's the 618. Most common between 50% and 618%. So we have to continue, believe it or not, to allow for additional upside. We have the rest of the world that's got to come in and take a peek and try to realize, gee, what is really going on over there in the United States and what's happening with Apple and Amazon, et cetera, et cetera, et cetera. We're now seeing Apple's now down. This is after. So again, bringing into focus, it isn't so. They did have good earnings, and that's great. If you're holding Apple stock, you're going to get a dividend, and they just plunked $90 billion back in their stock buyback program. So, you got a lot of bullish things going on there, but why is the stock now turning lower? Because I would imagine in their conference, the press conference, they're giving that forward guidance, and that forward guidance might be cautious. We still have to get through this period of inflation. We still have to control inflation, and they're predicting a recession. Haven't seen it yet, but that doesn't mean it won't happen. So how do we want to deal with all of this? We trade what's in front of us. But that's why I think that they got a little bit farther ahead of themselves, thinking that, okay, the lows are in and we're just going to go, and this is just because everything's great. That didn't happen. So now we're going to make another adjustment. That's what happens in an Elliott count. If indeed the wave 2 ended here, it's going to present another challenge, because I can move this back and I can make this sub-minute 1 and I can leave this as sub-minute 2. But I'm afraid that that's not going to cut it. And I'll tell you why, because of what I'm looking for now. This put too much upside pressure, and this actually likely caused a lot of short covering across the board. You start flying through stuff, you got no choice. You just you can't hold it. Because if you're short, unless you're really big, you're getting killed. You got killed. And even as a day trader, if you shorted this thing, hoping that it was going to do a turn, you got killed. You'd lose your accounts. That's what kind of day it was, where it was just insistent, persistent buying. So what do we need to look for from here? Well, if this is going to be minute wave 1 and this is going to be minute wave 2, then this market starts to come off. This market starts to come off. Come on, geez, Louise. I don't know why this thing does that. Guess I should call and find out. All right, so here we are. This is the 30-minute. I actually want to see it on the hourly because that's the moving averages we work with. There we go. So here we are. 200's above, the 50's the one on the bottom. So the picture really did change on this intense buying today. But then so did the aftermarket, has put a real glitch in the whole thing. The fact that we've come back pretty deeply, we've come back and now rest just above the 20 period moving average on the hourly chart. Right below that is the 50. So what I'd be looking for, if I'm going to put the C here and put a 2, we're now working that first wave down of this continuing third. But if this is a minute, we're in a minute third of a minor third of an intermediate third. So again, we continue to confront that same scenario of being in a 3 of a 3 of a 3. We still are confronting it, regardless of today. And again, it goes back to the conversation that's been ongoing. It's like, gee, how are we going to factor in when somebody does kind of blow the doors off, as Apple attempted to do? We can see market reacted. Yep. We had a run up. Yep. Well, now we see what it was. That it was all a part of wave 2. Now, whether it's if it would have remained a sub-minute wave 2 or a minute total minute wave two makes no difference. It was the pattern. It just climbed higher, but it still was not going to break and turn bullish. Not in this pattern. Trending is down. That's been established for a while. The trend is down. Up moves are counter trend. That's going to stay the same. We don't have any evidence that it's anything different right now. And that's what I keep talking about. So when I get into this type of a move, it's corrective. It's totally corrective. And it fits. And its current position, whether it was a minute or sub-minute wave two, they are deceptive. They can run. They can be deceptive enough that, oh, the bottom's in this case, or the top's in if we're dropping. It just fits. And traders get caught up in that. It's the emotion. It's what creates the waves. It's what creates the waves going up. It's what creates the waves going down. So here we are. If indeed that's going to be the completion point for minute wave two, we will continue lower, of course. We will pick up steam. We will break below the 20. We will break below the 50. We will keep going. That's the hourly chart now. And we'll keep going. We will break below 13,159. We will break below 13,033. We will break below 12,930. We will break below 12,801. That's that low right there. Now, having said that, that's just the beginning of wave three. Okay, so this is the continuation if we get upside. Mark it down, 13,556, we're going to call it. We got that resistance at 542, the 200 sitting right above it, and then additional resistance at 13,733 and 13,863. Now again, on this wave two, it cannot get across here. So actually, by moving it, it gave a lot more room if they just want to continue this rally. So, and Apple says it's not providing revenue guidance. How about that? There's the news. And that's why I think suddenly Apple's now moving lower. Apple says not providing revenue guidance going forward. You see what the market wants to tell you. Oh, really? What's that supposed to mean? They're not taking it well. It was just trading 155. So somebody's like deciding to pop it up a little bit. That's an interesting statement for a tech massive company to say to its shareholders. Oh, by the way, no more revenue guidance going forward. Wow. Wow. It's quite the statement, but they're going to stand there and buy it anyway. Okay, so if it breaks all down, I would suspect that from this level, with everything that's still going on that hasn't changed, and now we have the news on earnings, we stand an increased chance of just sliding, of just like, okay, reality, now you're going to catch, high news, you're going to catch up with reality. And the reality is this is what's going on. The reality is this is what's happening. So we'll see. But if it goes, this goes down. And it could go down fast. And it may be well on the way by the time we get up tomorrow and get to the computers and turn them on. So we would be in a third wave. Now, I'm going to remove this. Let's take a peek. First, I've got to go up to my daily. And I am going to put the first layer on. And actually, I will just go, let's deal with that third wave and we'll go up to the larger third wave. So come on. Where is it? That's why I went up to the daily. Sorry. let's go try that again, because you see, we're getting so far that now I got to get up here so I can get a hold of all this stuff. There's the top. We'll go there. I'll go here. And then I'm going to go up to here. Now, this one is going to be not as accurate to the size, because you can see this third would be equal to the first at 12,733. That is not going to cut it. We were almost there. 11,775 next up. But I think that is just going to be where minute wave 3 finishes. So that's why I think this is a little bit inaccurate. And why? Because the second wave came in underneath expectations. So it doesn't become as comparative in terms of a first and the third. The third wave, longest and the strongest, it might come down here. So instead of us looking at the 100%, maybe it's going to come in at 200%. So wave 3 will be 200% times the length of wave 1. The minor wave 3 will be 200 times the length of the minor wave 1. So, and that is more realistic to me. 11,182, we'll call it. That is where I think we need to end up. And then that's just the minor 3. Then we get a minor 4 and then an additional slide lower. Now I will go, I'm going to get rid of that one because we don't want to futz with it. And I got to go out. Sorry, got to go out, do this all over again so I can pull the next one down. And that's going to be our intermediate third wave. All right. So there, there, to there. All right, so now I'm going to go correct that. Just give me 1 second because this actually ended at 68. Oh, damn. 2005, 68. Okay, 16.7. Nope. 68. And this was actually 43. All right, so let's clean that up so we get some good numbers here. Okay. Oh man, what the hell? Where'd this end up? Okay. Sorry about that. I added one too many digits. There we go. All right, so back to our hourly chart. We've already thought, well, that this minor wave 3, or even the minute wave 3, but the minor wave 3 is going to end up somewhere down here. And that's where this larger intermediate wave 3 would be equal to intermediate wave 1. That's what I'm talking about. The size is big. I am still looking for intermediate wave 3 to come down here. So if this ends the third waves down in here and we get a fourth wave, should be decent. It's going to be a bounce. Then we get a fifth wave down. I'm still looking for down here. Now, how the market chooses to get there is up to the market and not to us. Same thing with today. As frustrating as I got looking and watching, going like, wow, wow, wow. I had to kind of pinch myself and say, trade it. Trade it. Holy cow. They're just buying. You just got to do them, buy it, sit back and watch. Don't worry. Put a stop down below. Risk. And they did. And they took it and they took it and they took it and they took it. So it was a day, in all honesty, folks, it was a day where, you know, you just watched as your P&L went up hundreds, if not thousands. So this is a day where hundreds, even $1,000 P&Ls were being made in the micros. The move is that big. The move was that big. So downside, moves are going to be big. Now remember, this was definitely, they set the trend, but it was just today. This trend, the downside trend is they're still in force. That was just a C wave, and we know what the C wave looks like, see what it could be. and that fit perfectly. So once, if we get that turn, which I think we did, and we start to get this market dropping, which we will, then I'm looking for all this, and the trend would be down. And once you start breaking below that 50, I think it picks up steam. It starts to go. That's the hourly 50. Once we break below it, right there, what it is, 13,244. That's where it's sitting right now, kind of flat, support, but we'll see. And again, I don't know, it could happen when the Asian markets open, could happen when the US markets, again, the European markets open. So big choices. Apple blows the doors off. They're not going to give revenue guidance. What? We're getting out. People are getting out. You see how the trust factor just drops real quick? Does that make sense? We love you, Apple. We love you. We always go up. Oh, you're not going to tell us about what you think you're going to make? I'm getting out now. That's what they do. Attitude change. In any case, for tomorrow, continue to leave. We got to do it, but we have to leave the open potential for the market to continue up and to complete this C wave and to complete that minute wave 2. And we have resistance at 13,542. Then we have resistance at 13,562. And then we do have some additional up, but it would likely we could get a move that could bring us up above or closer to 13,800. Now, am I expecting that? Not really. Not really. I would be expecting more that we just start to pick up the steam, and that'll happen in about 28 minutes. Now, trade smart tomorrow, folks. It's expiration. And now that we've got the earnings, and now that Amazon is down to, oh boy, Amazon's really kind of dropping now. They're back below 2,600. They're halfway between, almost at 2,550. So, and Apple's now dropping back down, and Apple against the close is down over 7. They were up 7, now it's down 7. So we're back to where we started today. You're going to see a lot of these stocks getting marked down. So it could start once we might gap in 28 minutes, 27 minutes. Okay, be careful. Keep your mindset. Keep your focus. Have your trade plan. Have your rules. Follow your rules. And have a great trading day tomorrow. It promises to be, we thought today was wild and woolly when it comes to options. Boy, they got to unwind all those options tomorrow now. And we're going to be sliding through strike prices like crazy. Have a great trading day. Our next update will be on, believe it or not, Sunday, May 1st.